darling of Wall Street over and over again. Is Nvidia going to rule again? Why?
They're going to come back. The demand is real. All these SaaS-pocalypse, AI apocalypse, all the different kind of scenarios are basically being re-looked at, especially given the context of where we are on the geopolitical stage and the AI demand that people see that's real, that's physical, from data center development to energy and power plants that are being built to orders for chips. It's there. Let's be honest, the stock is barely up 1.2% for the year. It's down 2% for the past 6 months. And they look like it's $170, $180 support level on the back end. And on the top end, there seems to be immediate resistance at 190 to 192. But once it breaks past 192, you're going to see something different. And it's not because these are made up numbers. I mean, they're real revenues. I mean, you saw 78 to 79 billion. You see Jensen talking about a $1 trillion in sales from Vera Rubin and Blackwell through 2027. These are real numbers. And it's a year-over-year increase of 77 to 80%. You still can't deny that. And so when we look at the reset that's going to happen after this Iran conflict, you're going to see something different. You're going to see people coming back with tech as a flight back to safety. And more importantly, you're looking at tech as the only growth driver because it's the only unregulated industry out there. And chips are the heart of it. And Nvidia is at the heart of that AI boom.
And, so many guests who come on say how Nvidia is such a, enclosed network that it does a little bit of everything. It's not just, the chip sector or just, what a big picture it is. And that's what really differentiates it from its competitors. Would you agree to that?
Nicole, you're absolutely right. I mean, what they've done is they've gone from chip all the way to software, all the way up to agents. And they have not only invested in companies that are in the future, they've not only invested in the rest of the market, they've taken the entire ecosystem with them, not just through the CUDA software, not just through simulation through the Omniverse. We're only seeing 10% of the roadmap that's imagined in Jensen's head. And if you just look at market share, they have 94% of the ad and board market, 80% of the AI chip market, 80% of the AI data center market, and 95% of the gaming GPU market. And because they're investing and partnering all the way up the stack, they have the entire AI factory. This is compute, data, pathways, orchestration, and that's what's giving them leg up. And so they're now in software, they're now in connectivity. And that recent deal with Marvell shows that this glue moves across chipsets, optimizing power, latency, and they're basically building an OS for a single platform. And what they want to be is that one-stop shop where you access tokens, and tokens are the currency for AI. And they plan to be in every piece of that business.
Yeah, I mean, Marvell is hitting record highs, right? I mean, you don't see that every day. In fact, over 1 year, it's up 113%. Year to date, it's up 53%. And one of the articles said how it's getting a boost from Amazon, as well as from the optical business that it has. And we know there was actually an optical trade show recently. That was a big deal, too. It wasn't just the GTC show for Nvidia. That following that was that optics show, which had a lot of the big names, too. So Marvell getting a nice boost here.
Yeah, and this is just the beginning. We haven't talked about physical AI. We haven't talked about sovereign AI. Every country now wants to have their own AI so they can get the scales that the companies in their country are protected, their cultures, their values are being delivered in the right capacity. And the physical AI with the robots is coming 3 to 5 years out. It looks great now, but it's going to take 3 years for it to get commercialized. So sovereign physical AI, then the next set of chips. And the inference that they're doing now that we're moving out of training to inference is really shifting. So, but there are constraints. There are headwinds, too, that are in this space.
Ray, I can't tell you how many people come on and they talk about AI strength, how many people come on and talk about surging global demand and the AI revolution, and that we're still in the early stages. How does this Iran war factor in for tech investors overall? What would you say to them? Is this a great opportunity on the pullback? Because you have a lot of great names that are down, 20% off their highs right now, right?
Yeah, there is. But here's the thing. If the Iran war continues for 3 months, we're going to run out of sulfuric acid. We're going to run out of supply chains. You saw today, it's kind of funny. It shows up on your terminals. It said Toto not shipping any toilets because their supply chain is completely cut, right? So that's going to continue in the chip sector and in the AI sector if we're past 3 months out. If we're before 3 months out, which is where the traders are at this moment, they're betting the fact that this will be over in 3 months, then things are going to be okay. But what we're missing is sulfuric acid. That's what you need to etch chips on. You're missing all the components that are passing through the Strait of Hormuz. You're missing all the components that you need, not just the chemicals, but also the capabilities in terms of moving chips to one area and then back to the other, back to Taiwan and then back out. So that's really what's holding things up. And so those are some risks that are out there that you think. But if you look at the sentiment of everybody on the street, they think that this war will be over in 3 months, which is why you see the hedging in the different direction.
Well, it's good to see you. Ray Wang, thank you, of Constellation Research.